welcome to those who are joining. We'll just give it a minute or so to let people join in, and then Raphael will kick things off for you. We'll just give it another 30 seconds or so. There's 27 people signed up, and we're quite a ways from that number just yet. So we'll give another 30 seconds, and then you can get going, Raphael.
Okay, good.
Okay, why don't we'll get started. I'll be here, but just put myself on mute, so don't interrupt you at all or anything, Raphael, and good luck.
Okay, thanks. Thanks, Ray. Okay, guys, thanks for joining us today. Welcome to our presentation. Before we start the presentation, I would like to ask you to answer some couple questions, just a nice breaker. You can go to this website here. You can go to menti.com and enter this access code, and you will have 2 questions to answer and before the presentation. You can use this code 23570189 to answer those questions on Menti, www.menti.com. We can see people from China, India. Philippines. Okay, guys, and the next question, it's about work. Do you have a job here in Canada? Nice, there are people working full-time, part-time. No, but I want one. Nice. Okay, guys, let's get started the presentation. Thank you so much for answering those questions. Okay, welcome to today's workshop. My name is Rafael. I'm a second-year accounting student at Sioux College. And the Canadian Foundation for Economic Education is pleased to partner with the National Bank of Canada to provide a series of workshops to help post-secondary students across the country to get a better handle on their money. We are going to cover some very important information you will be able to do right away to better your relationship with money and encourage you to take control of your life to achieve your goals. This workshop will last about an hour, and then we will have a live Q&A at the end of the presentation. These workshops are intended to serve as a foundation resource to get you thinking about your finances, not as a final stop in your journey, in your financial journey. Consider the information and see how you can apply the concepts covered to your personal financial situation. Also, please understand that while we will do our best to answer all related questions, we will not be discussing topics beyond the scope of today's conversation. If you have any specific question that we are unable to address, consider setting up an appointment with a professional. We sent a press survey, we hope you have completed, and there will be a post survey that will be sent at the end of this session. If you fill both of them, you will be entering into a draw of one of 4 $50 Tim Hortons gift card to be drawn at the end of semester. First, a little bit about this program. CFEE and the National Bank have partnered to offer post-secondary students across the country access to financial literacy workshops. The program Help Manage Your Money on Campus is designed to help support young people by providing you with comprehensive financial education modules. This is so important and timely because more than ever, we live in a complex finance world. The majority of you have likely already experienced this world of financial costs, responsibilities, planning, spending, debt, credit cards, and much more. And that's exactly why we partnered with universities and colleges across the country to help students with the information you need to take on all of life financial challenges. We asked students what their priorities in the first half of 2020, what they want to learn more about, and 1,500 surveys later from students all across the country, and this is what we find out. Our research identified that nearly 2/3 of students are currently dealing with financial stress, plus 57% of students are looking for help preparing and working with a budget. Not only that, but half of students also reported having difficulty generally knowing how to manage their finances. Today, we are going to talk about 3 major topics. First, we'll discuss some basics of moving to Canada, things like the importance of creating a budget, questions you should ask before renting, and how to protect yourself from scams and fraud. Next, we'll look how to choose between bank accounts, credit cards, and the importance of working on your credit score. Finally, we want to talk about earning money and paying taxes in Canada, how to interpret a pay stub, when you are required to pay taxes, and the forms you need in order to complete your tax return. Coming out of this workshop, you'll be better prepared to the challenges of life in a new country, understand the importance of a credit score and the habits that will help to build yours, and know if and when you need to file taxes in Canada and the forms you will need to provide. Welcome to Canada, everyone. Whether you are brand new to the country, you have been here for a few months or years, or you have born in Canada, welcome, and I hope your experience have been positive so far. Moving to a new country is a huge step, especially if this is your first time living in your own. Domestic students often have trouble managing their finances when going out on their own for the first time. Thankfully, there are a few steps that can help you make your Canadian finances feel more manageable. So today, in this section, we'll talk about cost in Canada, rating, and privacy and scams. Dealing with new costs in a foreign currency can be complicated. Take steps to make the process as easy as possible. A great first step in managing your finances is to create a budget. Having a budget, it's a great habit to get into your long-term financial stability, but it's extremely important when you are on your own for the first time. If you don't have a plan, you may want to discover your money is gone out, but your expenses are not. It's important to remember that budgets are not just for people with a lot of money. If you have low or no income, creating a budget can help you ensure you get the most of each dollar. Here are two options of budgets that you can consider: zero-based and 50-30-20. A zero-based budget is about listing your anticipated income and expenses for the month and subtracting them to see how much money you have left. If you have a negative balance, more expenses than income, you need to find a way to decrease your costs or increase your income. As you progress through the month, monitor your spending so you can compare your actual costs to your expected ones and make improvements to your budget in the next month. A 50-30-20 is about fitting expenses into categories and allocating a certain percentage of your income to each one. 50% for needs, 30% for wants, 20% for your future. Your needs are things like food, water, and housing. Wants are takeout dinners, shopping, and future is about paying off your debts and building your savings. The percentage of your income required for each one may vary, but if your needs are more than 50%, try to decrease your wants before decreasing your future. 50-30-20 tends to be more flexible than compared to a zero-based budget. But for some people, a more flexible budget is harder to follow. Think about what would work best for you and try to do some research in other budget methods. Monitor your costs. When you are dealing with an entirely new currency, it can be difficult to know what is a good price. Take steps for ensure you don't pay more than necessary for products. Here are some tips to keep in mind to lower your monthly food expense. Ask people. Talk to people more familiar with the area to see which stores and areas tend to have better prices. Stick with the generic or store brand of groceries whenever available. The ingredients are usually similar to the brand name, but you are not shelling out extra money for the brand name. Look at unit prices, like buying gasoline. Know how much you are paying per unit of something from the grocery and buy ones that is cheaper in price per unit. But don't make the mistake of buying a large amount of something just because it's cheaper per unit. Create a shopping list, plan your meals ahead, and know the ingredients of each meal. The time you spend planning will end up being time you save while you are shopping, because the longer you stay in a supermarket, the more likely you are to spend money that you don't need, that you are not planning. Consider buying in bulk, as the prices can sometimes be cheaper per unit. Use apps like flip.com and rebi.com. They are excellent tools to check store flyers and coupons and search at the best price for the product you are looking for. Take advantage of student health insurance and benefits. Make note of what these plans offer. It can be a great way to save money on services that can become costly, like dental, vision, and medication costs, and even discounts on selected stores. Cell phones are a must-have for college students in Canada, and Canada has some of the most expensive wireless data costs in the world. It's a well-known problem for most Canadians that many tourists and newcomers always point out. After your monthly housing, grocery, and utility costs, it might just be the next priciest thing in your entire budget. So how can you lower this fixed expense? Here are some tips. Try out smaller carriers. Bell, Telus, and Rogers often offer the most expensive phone plans in the country. Before going to these carriers, try out their discount brands like Freedom, Fido, or Lucky Mobile. Smaller carriers often use the same coverage as larger companies, so the quality of the service will be the same compared to the big companies. Avoid subsidized phone traps. While a $0 iPhone sounds like a great deal, it's probably not so sweet over the course of a 2-year contract. In fact, after you add in the monthly fees for financing the phone, you might even be paying more than in retail. Our advice is to buy a used phone and then select a cheaper monthly plan without the phone payment bundling. This could end up saving hundreds of dollars. Shop around for the best deal. Take advantage of deals like on days like Black Friday or Boxing Day. Carriers usually offer discounts or cheaper plans on these dates. Use Wi-Fi whenever you can. One of the easiest ways to trim your cell phone bill is to cut out extra data charges by using Wi-Fi available to you in your surroundings. Many restaurants, coffee shops, and even malls offer Wi-Fi for free. So make sure to use advantage of that. Additional costs. In Canada, the sticker price you see for an item is the pre-tax total. This means at the cash, you will end up paying 5 to 15% more after taxes are applied. This extra cost will vary by province. In Ontario, you will pay 13% on taxes. Another custom in Canada that may seem unusual to people from outside is tipping. While leaving a tip is not required, in Canada, it is customary to leave a tip for servers and food delivery drivers. Generally, the tip will amount 10 to 20% on the final bill, with the average being 15%. Housing. As someone new to the country, it's important to know that in Canada, housing is a human right, legally protected from discrimination. That means a landlord cannot refuse to rent to you because your age, your race, gender, religion, or other protected grounds. They can choose to rent to someone else. And if you don't meet other eligibility criteria, like having enough income, they can turn you down, but cannot refuse just because of who you are or where you came from. If you believe you have been discriminated against, contact your provincial human rights tribunal. When it comes to renting, the very first step is to think about what you can afford to pay for a rental. Accommodations in Canada can be extremely expensive, and when you are a student, you likely don't have a lot of income. By creating a budget for yourself, you can see the effect different priced rental units can have on your available funds, creating a budget of what you can afford to spend. If you are having trouble finding a rental unit in your price range, consider finding roommates. By dividing the cost of rent among you, it may be easier to find something within your price. Things to consider when it comes to roommates. You need to agree upon a price range. Don't spend more money than you are comfortable with just because your roommate wants to. You need to agree upon responsibilities. One of the benefits of living with roommates is that you can share responsibilities. However, holding people accountable for their share can be difficult if you don't get an agreement in writing. So outline the responsibilities in a contract and have all people sign. You need to be sure that landlord will allow it. Depending on the size of the place, some landlords may have limits to the number of people who can live in a space based on the available utilities and the fire code. Be upfront with the prospective landlord about how many people intend to share the place. When you sign a lease, you are committing to pay rent for the term of that lease, usually 1 year. Here are some questions to go through before signing anything. Are utilities included in the rent? Utilities are like electricity, water, and heat. These are considered vital services, and access to them is required in order to rent out the unit. Some leases will include the cost of utilities in the rent amount, but in other cases, you'll be required to set up a payment with the supplier. If utilities are not included in rent, ask how much they usually cost per month, as you will be responsible for paying this above and beyond your rent. Can I redecorate? Some landlords may be fine with you redecorating the space, while others may not want you painting or hanging things on the walls. Is smoking allowed? Landlords are legally allowed to ban smoking within the specific units and across the entire property, if they wish. If you intend to smoke, ensure you know where it is allowed so you don't violate your lease. Is parking available? Not every apartment comes with available parking. If you have or are planning to get a car, make sure you know where you can park. What is the neighborhood like? Researching the area can be a valuable tool for making a rental decision. You don't want to commit to living there for a year, only to discover later that the neighborhood or community don't offer the services you need or make you feel uncomfortable. Who maintains the property? Maintenance and repairs are the responsibility of the landlord, but they can hire others to do the actual work. Make sure you know who to contact when something goes wrong, so it is dealt with a timely, efficient manner. The landlord-tenant responsibilities require a division of responsibility. Your landlord is required to maintain the building and provide repairs. As a tenant, it's your responsibility to pay your rent on time and in full. Keep your home clean and contact the landlord if any service or repairs are required. Make sure any specific responsibilities are outlined in the lease, so you have a legal record of them. Now we have a Zoom poll, a question for you guys.
Okay, so the first poll should be up on your screen. Do you need a lease agreement if you know the landlord or are moving in with a friend? This is all anonymous, so just kind of give us your thoughts, and afterwards we'll share the responses with everybody. And okay, I'll give it about 10 more seconds, and then I will show you the results of the poll. Raphael?
Yes, you can show the answers.
Okay, do you see those?
Yes.
Oh, okay.
Okay, guys, the correct answer is always. Most of you did it right. Even if you know the person you are moving in with, having a lease is really important to outline responsibilities and prevent future confusion. You may know the person well, but what if 3 months and you have a disagreement about who is responsible for the maintenance? Having a lease removes the risk by clearly outlining which each person is responsible for and how to deal with disagreements. Thanks for answering, guys. Privacy and scams. As more of our personal information makes its way online, we become susceptible to scams and fraud. Keep sensitive information like your social insurance number, personal identification number, and other information like bank accounts and passcodes safe. As newcomers to Canada, you may be targeted by scams, especially those mimicking government organizations like Immigration or IRCC. Please take some time after the workshop to review the link from the Government of Canada to learn how different government agencies will contact you and what types of information they will and won't ask for. The link is in the resource document that it will be provided for you guys. Finally, as we are getting ready to move into the working world in Canada, finding and securing a job can be a stressful process. It's important to know that employers cannot ask you to pay a fee in order to secure a job. This is likely a sign of scam and should be reported. Here are some key takeaways from this first section. First, number one, create a budget to make tracking unfamiliar costs in your new country as easy as possible. Two, ask questions about before renting so you know where you'll be living, and be sure to understand what both and your landlord are responsible for in your lease. Protect your personal information by familiarizing yourself with the way different government organizations will contact you and what you should and should not provide. In this section, we are going to look at banking and credit for newcomers in Canada. We will talk about choosing a bank, credit scores, and credit cards. In order to open a bank account in Canada, you must generally need to meet 3 requirements. You must be over 18 or have a parent or a guardian who can sign on your behalf to open the account. You must have enough money to cover the minimum deposit. Some banks do not require a minimum to open an account, while other banks require 25 to 100 to meet their minimums. Keep this in mind while searching for the right account for your needs. Finally, you need to have some form of Canadian photo ID in order to open a bank account. In the next few slides, we will look at how you can decide between different banks and account options. But once you know, you can reach out via bank's website to see what their preferred process for opening an account, whether it's by an appointment in person or online. When getting started in Canada, it's important to know that your banking information does not transfer from your home country. You will be responsible for choosing a new bank, setting up accounts, and transferring any money that you want to use in those accounts. The first thing to keep in mind when looking at which bank to choose is the general stability of the bank system in Canada. We have strong banking regulations which prevent drastic variability from one bank to the next. And all charter banks in Canada are insured for $100,000 per person through CDIC, Canada Deposit Insurance Corporation. So with national bank stability taken care of, the product, services, and convenience the different banks can offer, you are going to be the biggest factors in your decision. On the next slide, we are going to look at an accounting comparison tool from the Financial Consumer Agency that can help you compare. I'm going to show you now how this accounting comparison tool works. Right here, no. Here. Here's the account comparison tool. You can compare any accounts you want to check. First of all, you need to select our province, Ontario, checking account. You will be using Canadian dollars, and we are students and newcomers. So we click search, and a lot of results will come up. We have 89 bank accounts. So we select 2 or 3 we want to compare. For example, I will get here, let me see, students account, First Nations Bank of Canada, and student bank advantage plan from Scotiabank. And I select 2 or 3 and click here and compare 2 or 3 results. And here we have a comparison between those 2 accounts. In the first column, we have the First Nations Bank of Canada. In the second one, we have the Scotiabank. And here we can see monthly fees. No one have monthly fees. Withdrawal fees, how much they will charge us if when we make withdrawal. For example, in the branch, no extra fee. In an ATM in another institution, the First Nations Bank will charge $2. The Scotiabank $1.5. Transfer fees, there's no transfer fees. Overdraft protection for the First Nations Bank is $4. For the Scotiabank is $5 per month. And we have a lot of other information here that you can use to decide which account you want to sign. And this link will be available in the research document as well. So now let's go back to the presentation. Okay, so this is the link, the account comparison tool. Okay, now we are going to talk about 2 kinds of accounts in Canada, TFSA and RRSCP. One of the most common questions there is whether to invest in RRSCP, Registered Retirement Saving Plans, or a tax-free savings account, TFSA. Both of them will help you save on taxes, but each works in different ways. Understanding these investments will help you know when to use one or other and when you can use both. TFSA stands for Tax-Free Savings Accounts. You don't need any earned income to contribute to a TFSA, which may be more advantageous for international students if you work a limited amount each year. The gains you make from any investments and savings in the account are tax-free, meaning all yours. It's a great incentive for saving and for maximize earnings you may get. But the name savings account is actually misleading. A TFSA functions as an investment basket. You can pick what to put into the basket from a wide array of financial assets, exchange-traded funds, GIC, stocks, bonds, and savings accounts. That means that you are not limited to the measly interest rates, usually under 1%, that traditional savings accounts offer. TFSA also have very few withdrawal rules associated with them. You are free to withdraw at any time without penalty, but there are some government mandate limits to how much you can contribute every year. The maximum you are allowed to put into a TFSA each year is known as the contribution limit. For 2022, it was $6,000. Additionally, you can carry forward an unused contribution room to the maximum of of 81,500 since the inception of the TFSA. And RRSCP is also a government-sponsored retirement plan with significant tax benefits, but it works a bit different than a TFSA. An RRSCP is called a tax-deferred account, meaning that the government created them specifically to provide tax breaks to those who invest money in an RRSP as a way to motivate them to put away money for their retirement. But instead of your earnings being tax-free, as in case of a TFSA, any money you contribute to an RRSP will be exempt from income taxes the year you make the deposit and will only be taxed years down the line when you withdraw it. RRSP are therefore an effective way to cut down a current year tax bill. The deduction limit is usually 18% of your income, or $29,210 for 2022, whichever is less. Now that we covered some fundamental differences between RRSP and TFSA, the question is, which one should you be using? The rule of thumb depends on your income level, what you think you'll be earning in the future, your spending habits, and your saving goals. In an ideal world, you'll be able to contribute to both an RRSP and TFSA and meet the maximum contribution limits each year. But that's simply not financially feasible for everyone. So it becomes a question of identifying which account is better suited for a particular financial goals and situations. Now we have another question for you guys. Can international students open a TFSA or RRSCP? Yes, no, or yes if are 18 years old of age and have a valid social insurance number. Let's see what you guys will answer.
Okay, we got a few responses. I'll give it like 10 more seconds and then share the poll.
That's the answer. Yes, guys, the most of you did it right. The correct answer is yes, if you are 18 years old of age or older and have a valid social insurance number. That's the correct answer. Any individual who is 18 years old or older and has a valid social insurance number is eligible to open a TFSA. Also, any contributions made while you are a non-resident will be subject to a 1% tax for each month the contribution stays in the account. International students may begin contributing to an RRSP or Registered Education Savings Plan before obtaining or applying for permanent residency, as long as you have a social insurance number and have earned income and filed income tax return in Canada. Credit scores. In Canada, a credit score is used to determine what kind of borrower you are. Your credit score will range between 300 and 900. And the higher the number, the higher your chances of being approved for credit and qualifying for preferred rates. When you first move to Canada, you will not have a credit score. Even if you had a perfect credit wherever you lived before, that unfortunately does not follow you to Canada. Because of that, it's important to take steps to start working on your credit score right away. Good credit can help you save money in the long run by earning you lower interest rates, and this is a requirement for things like a mortgage. Without a credit score, it can be difficult or impossible to do things like rent, buying a home, buying or leasing a car, making major purchases, or pay for unexpected costs. Building credit is a continual cycle. You start by getting access to credit through things like credit cards. Once you have credit, you need to use it responsibly. That means you want to avoid using more than the average of 30% of your available credit at a time. This is called your credit utilization. While it may be not possible to never go over 30%, you want to keep your average balance below that point. Another habit of responsible credit use is not applying for credit if you don't need it. Each credit application affects your credit score, as it is considered a hard check. Too many applications in a short time can drag your score down. Even if you use your credit responsibly, carrying a balance from one month to the next can make it difficult to improve. Paying your balance in full each month will also ensure don't pay interest on your debt, keeping more money in your pocket. You won't build a good credit score overnight, but with good habits and consistency, you will start to see a meaningful improvement before you finish your first year, maybe even your first semester. Once your score improves, it will become easier to access credit, which gives you more opportunity to use it responsibly and improve your score further. Now that we understand the importance of having a good credit score and how responsible usage can improve your score, how do you get started? For many, the first step toward building a credit is getting a credit card. Credit cards are the form of borrowing where you charge a purchase to the card, then pay it back to the card issuer. One major myth is that not having credit means you can't have bad credit. This isn't true. No credit and good credit are very different things. 30% of your credit score is history of payments. So without using your credit, it will be impossible to make meaningful improvements in your score. That's where credit cards come in. Credit cards are a relatively easy way to gain access to credit so you can work on improving your score. When using a credit card, it can be tempting to view your available limit as extra money. Avoid this mentality. It can lead to overextension and interest payments. How to choose a credit card? Before applying for a credit card, check your credit score. This will make it easier for you to judge which card options you may be eligible for. You can check your credit score for free through apps like Credit Karma, Borrowell, and Mogul, as well as many personal banking apps, or by requesting a free annual credit report from Equifax or TransUnion. According to Equifax, a score of 660 and above is generally considered good and will help with your eligibility for cards. Once you know your score, you need to decide if you are looking for a standard card, a student card, or a secured card. While your credit score is a very important part of securing a card, full-time students with low to no credit are often eligible for a special student card to help them get started. Many banks also offer credit cards specifically for newcomers to Canada. If for some reason these options are not available for you, you can look at applying for a secured card. Many credit cards come with incentives like cashback, low interest, or reward points. Find the incentive that works best for you. Grocery money, travel points, movie tickets. Make sure you also keep the annual fees in mind for the credit card you are applying for. If a card has a fee, you want to be sure you can earn more through your incentives each year than the card costs, or it likely isn't worth for you. Here we have some takeaways from this section. Number one, find a bank account that fits your needs. Remember that all chartered banks in Canada are insured through CDIC. know what a credit score is and the responsible practice that can help you build your credit in Canada. Find a credit card that fits your needs so you can work on building your credit score. Now we are going to talk about income and taxes, understanding what you make and what you owe. We are going to take a look at pay stubs, Canadian tax system, and what you need to file your taxes. When you earn income in Canada, you are going to be issued a pay stub that keeps track of your income from that pay, as well as relevant deductions. It's important to review each pay stub to ensure no errors were made to either your income or your deductions. On the top of our example, we can see when the pay period ended, which can tell you the income was earned, when the income was earned, the date you were paid, and the specific check number associated with that pay. On the left, we have the type of income being received, such as regular or overtime, the pay rate, the number of hours, that rate, and the total gross pay for that category. On the right, there are relevant deductions. In Canada, we have 3 mandatory deductions that we will see in every pay stub, which are CPP, is the Canadian Pension Plan. This is a public pension available to anyone in Canada over the age of 60 who has contributed to the plan in the past. CPP deductions are currently equal to 5.7%. Your employer matches this contribution. So for each dollar you pay, your employer also pays $1. EI is an employment insurance. This is a public income program for people who have previously worked but lost their job through no fault of their own. 2022 EI deduction were 1.58% of your gross income, with employers contributing 2.21% in addition. That means that for every dollar you pay to EI, your employer pays $1.40. Income tax is a deduction based on your estimated tax burden for the year. We'll talk more about this throughout this section. There are many other possible deductions that can be taken off your pay, depending on whether you have benefits or are part of a union. Take some time to review the deductions on your next pay stub to familiarize yourself with where your money is going and why. Taxes. Canada's tax system is based on the self-assessment principle, which means that you must complete a tax return each year to report all your income sources, wage, tips, bonuses, scholarships, to the Canada Revenue Agency, CRA, and declare your eligibility for any deductions or tax credits to calculate whether you owe tax or you receive a refund. While some taxes may be withheld from your paycheck, that may not account for everything. It's important to always file a tax return if you earn income to avoid getting trouble with the CRA. Taxes are used to pay for government operations and many of the services they provide, like healthcare, education, and national defense. Much of these taxes also go toward aiding lower income or vulnerable Canadians in the form of child benefits, employment insurance, old age security, and social assistance. Canada has a progressive tax system, which means the more you earn, the more you pay. Under the system, money is divided into income brackets, which determine the applicable tax rate. A common mistake is to assume that all income is charged at the rate of its highest tax bracket. In fact, we are charged progressively, which means that first you pay the rate in the lowest bracket and only pay the higher rate on each additional dollar. This is also called your marginal tax rate. In a hypothetical example, if you earn $1, you will pay 10%. But on the second dollar, you have to pay 20%. And on the third dollar, you have to pay 30%. But you never have to pay 30% of $3. Instead, you pay a total of just 60 cents, which works out to an average tax rate of 20%. While there are circumstances where self-employed individuals can file taxes at a later time, the general rule for employed Canadians is that your taxes must be filed and paid by April 30 for the previous calendar year. That means April 30, 2023, you will be filing your 2022 taxes. If you file late or don't pay on time, you will be charged late filing fees from the CRA. Failing to file your taxes could be viewed as a tax evasion and comes with serious problems. Note that the term taxable income. That is because you may not be taxed on all your income. Certain deductions may be able to be claimed to arrive at taxable income. For example, if you make contribution to your RRSP, that amount may be deduction from income, reducing the amount of taxes you have to pay. For example, if you earn an income of $60,000 and put $5,000 into an RRSP, then you'll be taxed on the adjusted amount of $55,000. When you are able to deduct money from your income, your total income, and hence your marginal tax bracket, is very important. For the highest earners, an RRSP contribution is much more valuable in terms of dollars and percent of contribution you receive back from the government. Some other examples of deductions include moving expenses. If you had to move more than 40 kilometers to take a job, and childcare expenses for children under 16 years. Make sure to keep all your receipts when you move. There are also tax credits. Deductions from income reduce your taxable income, whereas tax credits are amounts that reduce the tax you pay on your taxable income. The more tax credits that apply to you, the more you can reduce your income tax. Everyone who files a tax return gets the basic personal amount, BPA, as a non-refundable tax credit. It reduces your tax payable, and if you earn less than the 22 federal filing amount of $14,398, you will pay $0 in federal income taxes. But if you don't owe any taxes, you won't generate a tax refund. Certain medical expenses or charitable donations can also result in tax credit that can reduce taxes payable. Make sure to keep all of your medical and donation receipts as you pay for medical costs or make donations. Here we have a short video explain the difference between deductions and credits. It's a US video, but the concepts are the same here in Canada. I'm gonna share this video with you guys.
Filing taxes is really nobody's idea of a good time, but one small joy you can get from it is in watching your tax bill go down as you add in deductions and credits. But what exactly is the difference between a tax deduction and a tax credit? Aren't they kind of just interchangeable? While both can be good for your final tax return, they are very different. First up, let's look at tax credits. A tax credit reduces your overall tax liability. So if you have a $1,000 tax credit, that means you no longer owe $1,000 on your taxes. A tax deduction reduces how much of your income gets taxed. Let's say you have a $1,000 tax deduction. It is applied to your top income tax bracket. So if you made $55,000 last year, your top tax bracket is 22%. That deduction means that $1,000 of your income won't be taxed. So you save that 22%, which would equal $220. This all makes tax credits sound pretty great, right? Most of the time, yes, but there are some catches. Many tax credits aren't refundable. What that means is, let's take this $1,000 tax credit again. But let's say you only owe the IRS $600. You don't get that extra $400.
So let's go back to our presentation. I hope this can help you understand a little bit of differences between the deductions and credits. So in summary, deductions lower your taxable income, decreasing your calculated rates for the year, while tax credits apply after your taxes have been calculated, lowering what you owe to zero and potentially beyond. Now we have one more question for you guys. Can you claim tuition on your taxes? The options are no, yes as a deduction, yes as a refundable tax credit, or yes as a non-refundable tax credit. Let's see what you answer.
Okay, we'll give it another 15, 20 seconds just for people to respond.
Okay, great.
Okay, I'll
Okay.
share the results.
Okay, guys, we have some correct answers. The correct answer is yes as a non-refundable. Oh, nobody answered correct. Oh, sorry about that, guys. The correct answer is yes as a non-refundable tax credit. You can claim your taxes you pay on tuition as a non-refundable tax credit if you file your taxes and provide a T-2202 form issued by your school. A non-refundable credit means it can lower the taxes you owe to zero, but will not generate a tax return. If you don't use your entire credit in 1 year, you can apply to carry it forward indefinitely. Okay, let's move on. Do you have to complete a tax return? International students in Canada can have a difficult time deciding whether they should file Canadian income taxes. This is because international students do not always owe taxes or qualify for refunds or credits. Here are the basics for determining whether or not you need to complete a tax return. Canadian earned income is always taxable in Canada. Employment with a Canadian company is a clear indication that you should file a tax return for both residents and non-residents. As such, international students employed in Canada may find themselves either owing tax or being owed a tax return, tax refund. Students who have established significant residential ties to Canada can be considered residents of Canada. Significant residential ties include a home, whether it is owned or rented, a Canadian bank account, or a driver's license. Living with spouse or dependents or other significant social ties to Canada. Like all other Canadian residents, international students under this category are eligible for GST credits, tuition carry forward credits, and other provincial credits or tuition rebates. Students who spend less than 183 days or 6 months in Canada and who do not establish residential ties in Canada are generally considered to be non-residents. Non-residents are not eligible for benefits and credits and are only required to file a tax return to pay taxes or receive a refund if too much tax was paid on income from Canadian sources. This also applies to deemed non-residents who are students who have established significant residential ties with Canada, but are considered residents of other countries, which Canada has a tax treaty agreement. Here's a little checklist that you can use for your tax filing journey. In Canada, it's always your responsibility to make sure your taxes are filled. Even if your employer withheld some from your paycheck, the amounts withheld are an estimate. Keep in mind that most common expenses that students can claim as non-refundable tax credits are tuition fees, medical expenses, interest paid on student loans, and donations. Earned income in Canada is always taxable, and your employer will provide a T4 form that you use to report your income, which is available around February or March for the previous calendar year. So in a few months, people who is working in Canada will be receiving the T4 form from their employer regarding the previous year, 2022. If you've earned interest through things like investments, you will be issued a T5. This T5 form is available through whichever company you earn the interest from, your bank or your financial institution, and is legally required. Interest income counts as income in Canada. You may be eligible to deduct certain expenses from your tax payments against your Canadian income. Moving expense such as transportation and storage of personal stuff, travel, and temporary accommodation may be considered eligible deductions. Save your receipts. However, you can't deduct moving expense. However, you can't deduct moving expenses if your only income at the new location is a scholarship, which is entirely exempt from taxes. Additionally, in order to claim expenses in Canada, you must keep documents providing them for a period of 6 years after you have notice of assessment issued by the tax office. Here we have some key takeaways from this section. Understand your pay stub and deductions on it. Determining whether you have to file a tax return. Are you a resident or a non-resident? Checklist to go over in your tax filing journey in Canada. So let's review what we have talked about today. Create a budget to make tracking unfamiliar costs in a new country as easy as possible. Ask questions before renting, so you know where you'll be living, and be sure to understand what both you and your landlord are responsible for in the lease. Protect your personal information by familiarizing yourself with the way different government organizations will contact you and what you should and should not provide. Find a bank account that fits your needs. Remember that all chartered banks in Canada are insured through CDIC. Know what a credit score is and the responsible practices that can help you build your credit score in Canada. Find a credit card that fits your needs so you can work building your credit. Understand your pay stub and the deductions on it. Determine whether you have to file a tax return. Checklist to go over in your tax filing journey in Canada. So coming out of this workshop, you'll be better prepared for the challenges of a life in a new country by creating a budget and being informed. Understand the importance of a credit score and the habits that will help you build yours. Know if and when you need to file taxes in Canada and the forms you need to provide. Create a personal budget so you can monitor your costs and keep an eye on your money. Compare bank accounts and credit cards to find ones that fit best with your personal needs. If you earn income in Canada during the year, you have to file taxes. Keep all your information together so you're prepared in April when the taxes are due. Finally, consult the CFEE program resources for things like bank account comparison tool, information on the ways government agencies will contact you, and the eligibility criteria for employment insurance, and much more. Now we have a question and answer section. Please complete the post-workshop survey. It's important that we ensure that workshops are providing you with the information you need. And if you completed the pre-survey, you'll be entering into a draw for one of four $50,000 Tim Hortons gift card. So you can post your questions on the Q&A section instead of the chat, and we will be here to answer it.
Thanks a lot for going through all that, Raphael. Great job.
Thanks, Craig. Thanks everyone for attending today.
Yeah, so if anyone has any questions, as Raphael mentioned, just drop them into the Q&A. I did put the pre and post survey in the chat. So if you want to complete those, if you completed both, you'll be entered into the draw for the Tim Hortons gift card. And those are in the chat. Okay, no questions yet. We'll give it another minute or so, Raphael, to see if anyone puts anything there.
Let's see, we have a question here. How to save on taxes? Good question. How to save on taxes? I believe. What do you think, Craig?
I think there's several things you walk through during the presentation. There's various deductions and credits that are available. Important to understand and learn more about those. There's a resource document that'll come out after this this workshop for those who are registered, and that'll give you some more detail. Canada Revenue Agency has good information on their website. And then things like the TFSA and RRSPs and that sort of idea, that those are some of the ways that you can try to save on taxes. And it's typically a very good investment of your time if you take the time to understand some of these things. It can pay off multiple times for your time. So hopefully that gave you some ideas on how to save taxes.
There's another question. How can we file taxes? Is it possible to file by myself, or do I need to go for any tax advisor? I believe we can do by ourselves, right, Craig? But I believe it's good if you are filing for the first time to go to a tax advisor or a professional, right?
Yeah, definitely. And that first time it can be a little bit overwhelming. Some of the documentation that's written up is challenging. One of the things you may want to look into are services like TurboTax and others like that. I personally use that and find it quite helpful, just as far as it kind of steps you through and walks you through. And then Ahmed, I think you're there. Is there any sort of volunteer tax center aspect at Sioux College or in that area? or maybe Raphael, sorry.
Yes, I was about to talk about this.
Thank you.
We will have in April, I think it's in April or end of March, we'll have some clinics in our tax personal course that we are having now. We have some clinics to help students to file their taxes for free. It's a service, a voluntary services that we'll have in April, I believe. That's it, Prof.
Yeah, absolutely. Hello, everyone. This is Ahmed Al-Qassani. I work with the CSU. Really good questions. I see a lot about taxes, which is really great to hear. My answer for all of them would be is like we advise you to attend our upcoming sessions on March 15th, and it's about understanding personal income taxes, where we will go over all the details about how to prepare for your taxes, how to save on paying taxes, and all of this. Now, like the short answer, if you can do it by yourself, you could, but as Raphael said, maybe it's better if it's the first time to have a professional doing it for you. Here in Sault Ste. Marie, we have free tax clinics through United Way. So when the tax season comes, probably end of February or March, you will see posters and advertisement saying that you can get your taxes done free with United Way. And as Raphael said, here at the college, we have our second-year accounting students will help you as well with doing your income tax. It's going to be at the college, and it's going to be first come, first serve sign up. But you will see all the advertisement and all the promotion for that all over our social media. So follow us on social media for any updates about the incoming sessions or about the tax clinics that will happen in March. I hope this answers your question.
Thanks, Prof.
Yeah, no problem.
But do you have a computation about how to do taxes? Computation? I didn't get it.
Again, it's not a simple computation of how you're going to calculate your taxes. It's kind of a process you have to go through, determining your income, determining your tax credits, and all of that. Again, we're going to go through all of that in the understanding your personal income tax. So it's not an easy 2 or 3 steps. You have to go through the whole formula and through the whole forms to fill up. And most of the time, you're going to use a tax software. Some of them are free of charge. You can download the tax software like the TurboTax or Syntax or even Studio Taxes. You can use them as long as your income doesn't exceed a specific threshold. I see a question from Dennis about the next webinar schedule. The schedule is actually listed on our website, mycsu.ca. If you go to the professional and career development section, you will see all the upcoming webinars and sessions that are in collaboration between Sault College and the CP.
Thanks, Prof. There's another question. I've heard that business can pay less taxes. Can I create a company, just me, even without a real business? Is that possible here in Canada, Craig?
I wouldn't recommend it. You got to be careful here. You need to have a real business purpose, and you need to make sure that any receipts or expenses you have can stand up to any sort of scrutiny from the Canada Revenue Agency. So be careful on that. But you're right. The general premise that businesses can often pay less taxes, and you may have more expenses for things like if you're running a business out of your house, or if you're using your car, you can use some of those expenses to lower your taxable income. But please don't just try to set up a company and try to fake your way through it. Canada Revenue Agency will likely figure it out, and there are large penalties.
There's one more about credit score. How can we improve credit score if we don't use the credit card temporarily? Will that increase the score? As we said in the presentation, the best way to increase is through credit cards, right? Not using credit card, I don't believe it will help increasing the score. I heard some people saying that paying the phone bill on time, it helps. It also helps, but I don't think it's enough to make a huge difference on the increasing the score, right?
That's correct, Rafael. But I think there's kind of like some misunderstanding sometimes when it comes to the credit score, and some of us think that we only can increase that by the credit card. But as you said in the presentation, there are multiple ways that you could increase your credit limits. One of the main things is always pay your bills on time, whatever the bill is. If it's a phone bill, a college bill, credit card bill, just pay them on time, and that's going to make sure that you have a good credit score. And the other thing is, in case you have a credit card, not using it, that's fine. But the problem that don't use the full limit. So like if you have a $1,000 credit card allowance, don't use the whole $1,000, just like use a little bit less. So kind of they know that you don't use all your credit limit. So I believe if you're not using the credit card, that should be okay. But at the same time, you have to use it sometimes, like very often. But should be all right. Is that correct, Greg, or you have different thoughts about it?
No, I think that everything both of you said is accurate. And just maybe one thing to build upon what you were saying, Ahmed, as far as the credit card companies are looking for you to use. So in your example, $1,000 credit limit, they don't want to see you go much above about 30% of that. They're trying to extend credit to people, but they don't want you to potentially get in trouble with it or potentially not being able to repay it. So, try to use a credit card, with a lot of discipline, pay it off every month if you can. Don't overuse it. As Rafael was saying, one of the simpler ways to help build up a credit score, and it's many components to this, but is to use it on something that you're always going to pay, like a phone, like for your phone each month or things like that. So, a lot of this is it takes some time. The credit companies are looking for a pattern of paying off all of your bills on time, and it'll take some time. So just be patient, but do your best to use credit cards and other things like that in a very disciplined way. So we have an answer also from Thor on another way to help your credit score. Be cheap, be rich.
Yeah, that's a good one.
and be cheap, maybe just to expand upon that a little bit. Another way to think of that, just live within your means. I think a lot of folks get sort of enamored with wanting to buy more things. And, if you've got a certain level of income, develop a budget, make sure to live within your means and not extend yourself. Don't use credit. Don't use things like buy now, pay later if you really can't pay them off quickly. So good simple advice there, and a good way to help your financial self.
I think that's it.
Yeah, it looks like, a lot of great questions, as Ahmed was saying, a lot of good questions on tax, and a good opportunity for Rafael and Ahmed to talk about some of the opportunities to learn more about taxes. So that's great. So. Okay, well, Rafael, thank you very much for your time. Thank you everyone for the time attending. Ahmed, thanks for working with us to get this on the calendar. So help folks at Sioux College. And we look forward to upcoming workshops.
Thanks, Greg. Thanks everyone for attending today, for the patience. Thanks, Prof. And see you soon in the next one.
I know.
Bye.